No, that's me. I just ninja launched
Yeah.
us. So no intro. We've been talking about real estate, my former career, and project Grant's working on here in Chicago. So we're just
Yeah,
rolling.
that deal will be probably they bought it. It's a brand new build. It was built in 24. They thought they would be finished with it now. Interest rates didn't cooperate with them, so they're waking up today to 6.5% interest rates. So we're gonna steal the real estate. That's what we've been doing. And then what we do is let's say the real estate was worth X in a normal market, and now we can buy it for X minus 40 million. We just add $40 million of Bitcoin to get back to that original value that we know it's going to return to. So we just look at it like we're getting our Bitcoin for free.
Yeah, I mean that's a fantastic way to look at it, and it's funny. I know that deal so well, and yeah, I was actually assigned to handle that relationship. Now, that relationship, the owners of that property have some. They're very well connected. They are well connected to some of the wealthiest families in
Yeah.
Chicago. If you know anything about sort of the legacy people here, our governor, some other well-known people here, those kind of
You
names.
talking about Fat Man?
To I'm talking about the
Yeah.
fat man. Yes, yeah. Although he's like the pariah of the family, so it's interesting. And then there's some other very philanthropic families here as
Yeah.
well, with big names that everyone's heard of as well. That may or may not have some shady ties in the past, but
Well,
that's
dude,
neither
it's
here nor there.
Chicago. I mean,
So,
it's almost like
of course,
you have to have some shade just to
yeah,
get, in the game. Um,
yeah. If you're wealthy here, you compromised your morals
yeah.
somewhere. So that's the bottom
Yeah.
line. Yeah. Absolutely. Well, I really appreciate you coming on here. My wife's very jealous that I get to talk to
Oh,
you
that's
today.
awesome, man.
So
Well,
she's,
tell her
yeah,
hello for
yeah.
me.
I will do that. I'm a big fan, but she's an even bigger fan. So it's very cool. And so some of this stuff I, I usually like to have people give their backstory and talk about just how they
So
arrived
boring.
at
It's
Bitcoin,
so
especially
boring
someone
though,
like
dude.
I know it is, but you have a very different background in that you were into sales and self-promotion and all of this kind of stuff. And see, what I like to say is the people that we're doing business with at Sovereign, we find people that are in proof of work businesses, people that are actually having to do work, to do real life stuff. We have a very hard time selling our services or convincing people they need Bitcoin that sit behind a desk, put stuff into spreadsheets, go to their annual or quarterly board meetings. And it's the people that are actually putting in real time and effort. And I think your background is explicitly suited to that, where your entire ethos, everything you do, everything you preach, everything that's gotten you to where you are today is based on proof of work. And I'm just curious, we don't have to get the whole story, but did that sort of concept lead you to Bitcoin? Did you just come at it from an economic
Yeah.
standpoint, or what sort of
Well,
led you there?
I mean,
Yeah.
I've never been asked this question before, but it makes me think about because everything I do, it's like I have to prove to the marketplace something works first. I don't know why
Yes,
I
you
have
have
to
to add
do that.
value.
Like the banks don't do. I mean, the startups don't do it. They just go get money for an idea that basically has not been proven, and they raise trillions of dollars. I mean, I'm not even being exaggerating. Like trillions of dollars has been raised on concepts. Unfortunately, I guess it's a self-esteem issue on my part. I believe that I have to prove that this worked before I go, go really all in on it. Uh, it's
But I think that's the way things should work,
I don't
right?
know, man. Look, I'm getting over the
Yeah.
should works, and I'm starting to, at this point in my life, I'm like, wait a minute, I've been doing all the things I should do, but there's a lot of people getting further ahead of me, not doing the things I thought I should do. So, I was a young salesman in the automobile industry, and I looked around. And I'm like, we should not sell cars the way they sell cars, playing hide the weenie, you know, spend 2 hours building value just to finally one day. Bankers do the same thing, by the way. They won't tell you their fees until
Of
they build
course.
the whole value proposition. I'm like, bro, just how much are the fees? Okay. And so I
Yeah.
disrupted the automotive industry by saying, bro, just get to the price, feed the appetite, By the way, the price doesn't mean I had to discount it. Just because I get the price doesn't mean I had to discount it. I just need to put the people out of, out of concern. If you're looking for that pair of sunglasses, right? Like, if you're interested in them, the first thing you're going to think of is, well, I wonder if I can afford them. So let me just take the guy out of mystery. They're 680. By the way, I have another pair just like them that you could save 300 on. You won't even know the difference. But he's like, yeah, but I want the brand. I got to know that it's got the brand name. Okay, good. So I got him between 300 and 680 right now. I did it in the greeting. I won him over. I didn't spend time introducing myself. My introduction was to solve your concerns and the mystery. And then I can move into the sales process. Well, I introduced that to the auto industry. Nobody thought it would work. And then I scaled it to where I had manufacturers all over the world paying me money to come teach this new way of communicating sales. And that was the auto industry, which is a very old legacy industry. And
Yeah. Same thing with banking,
yeah, and
right?
same
You
same
know?
same thing with
Yeah.
moving the banking people into Bitcoin today, right? Very like, why would I change anything, bro? 7% of $1 trillion is a lot of money. I don't need to change my legacy business. So I've always believed that I had to go prove myself. I don't know that that's the right thing to do, so I don't want to recommend that because there's a lot of guys out there that, I mean, look at Jeff Bezos. He lost money for 17 years, to become the richest guy in the world. I've never lost money. Not 17 months. I've never lost money for 17 months. But maybe that's the thing I need to be doing. I need to be willing to lose money.
Well, it depends how well connected you are to the government, right? I mean, that was, that's Elon's model. Or, we've entered into this phase where it's to your point, this idea of proof of work, proving yourself that you actually have to go do something and provide real value. At the end of the day, right, being profitable, all that's saying is I'm providing
Yeah.
value. I'm producing something that people want at a lower price than they're willing to pay for it, and that's what we call production. That's what we call value. But we've had this system basically since 2008 where the Federal Reserve effectively took over. They had control of the monetary system, of course, before that, but now it's like control of the monetary system times 1,000. And they were able to pump so much liquidity and everything into the markets that you had companies like Uber that were losing $1 billion a year, a billion with a B dollars a year. But everyone on that C suite, all the people in that company, they're living very nicely in their San Francisco mansions or their fifth house in Dubai or whatever. But that's simply a fact that they were able to take advantage of this distorted monetary system, which people like to say it's a broken system. Personally, I think it's working is exactly as intended, that you get control of the money supply, you have control of society. And then these companies are allowed to not provide value, that they're allowed to rack up these massive losses. Elon Musk with Tesla, say what you want about the guy. I think he's brilliant. I think he's built some great stuff, but the guy loses money. And if he didn't have a government backstop, he would be broke like the
I would
rest of
love to
us. He's
be
not.
Elon, bro. I
eh,
would love to be the man.
Yeah. Well, that's good, but like you're making something profitable. Like if I'm you, I can go to sleep at night knowing that I'm providing value to the world, that I'm making something that people want, and it's not some rationalization of, hey, well, the government has to bail me out, has to provide subsidies because the world's not ready yet, or we're just 10 years into the future with these products and people don't get it yet, and therefore I need to be subsidized. And I think there's a disconnect when you have this excess flow of liquidity into society. And yeah, it sounds great, man. I would love to be Elon too. That would be
Yeah,
awesome. Jet setting all over the world, running six companies, but I'm still losing money. And
but
as
but
a
but I think in
entrepreneur,
Elon's
that's gotta
defense,
hurt.
what is he really losing?
Yeah.
I'm 67 years old, and look, I have been in the same camp you're in for many, many years, but I'm starting to wonder, am I the one that's wrong? Okay, like when I hear Elon talk, and you like the money's made up anyway. I'm really
Yeah.
starting to ask
Correct.
myself, what am I worried about losing? Like, what am I losing if I'm actually building value? Like we're building this. We did 5 real estate Bitcoin hybrids last year. Okay, proof of concept. Now Naka didn't do that. and another 150 guys didn't prove the concept. They just went and raised ridiculous amounts of money from people that lost a bunch of money to end up with a company that has no leadership, no product, no customers, no AR, like no accounts payable, no real service, no product, no revenue, but they did it, dude. He went and raised a whole bunch of money. Now he's gonna have to dig himself out. I don't know that he can, but I said, no, let me go prove the concept. We did 5 deals, about $1 billion of real estate, a couple $100 million of Bitcoin. But at some point, I still need to go to the marketplace. If I want to make this a monster thing, I still have to go to the marketplace. And at some point, we're probably going to leak out. And if it's actually a good value, I mean, I love my Teslas. And if he had to lose money to get to there, right? As opposed to, by the way, Ford Motor Company and Chrysler were both bailed
Of
out.
course. Oh, no doubt
So,
about it.
like, I'm starting,
One of the biggest bankruptcy cases in the last 20 years was the
yeah.
Ford Motor Co.
And,
one.
and
So,
so I'm
yeah,
starting to challenge myself.
or General
I'm
Motors, yeah.
starting to ask myself, man, do I have the wrong model? And if money doesn't matter, and if it really isn't valuable, and if it can be printed at will, fucking why not lose some?
Well, what if I reframed
Yeah,
it this way? Do you do you, um I would say you have an ethical
yeah,
model that is not maximized in the
yeah.
fiat
That's right.
system.
Yeah, that's right.
However, in a sound money system, in a Bitcoin standard, where we're going, your system is the only one that works. You will there will not be this endless debt creation. You will not be able to raise $1 trillion. You're going to actually have to go get equity from people to invest in your company, and they're going to want to see that they can actually get a
Yeah,
return, not that they're taking some flyer on something. So maybe in it, you know what, Grant, maybe even in your lifetime, maybe even in my lifetime, like this system continues on and we don't get to see a full Bitcoin standard. But I would say for your kids and for my kids, do you
yeah.
have
Two
kids?
two kids.
Oh, okay, so their kids, and I don't know if you're a grand parent yet
No.
or not, but it, so for those next generations of people, that's the legacy we want to leave behind. To say, hey, we did this right. We created something of value. You know what? Maybe I wasn't the first guy to travel into outer space because I was doing things the right way, but I left something for my kids I'm proud of. I left something for my progeny, these next generations. And you know what? They're going to succeed in the new world order because they have a business that's actually producing value as opposed to extracting debt and pulling value forward, which is ironically ruining those generations' future. I mean, look at millennials, look at Gen Z. That no one can afford a house, no one can afford to have kids, and it's all because money was pulled forward in this system to basically devalue their future, which is now their present. And I don't think we want to do that to our kids. But I'm curious what you
Well,
think about that.
I look at it a little differently. Okay. I am going to leave something for my kids. My kids are going to be proud, not of the stuff that I left behind, right? But that they won't have the same struggles. Now they're going to have their struggles. It's just going to be a different set of struggles. They're going to have to go from flying private to probably not having a private plane. Un-
At
yeah,
Southwest,
and,
yeah,
and then so they're going
yeah.
to have that transition backwards. Unless they decide to, like, okay, I'm going to go take what Papa put together and I'm going to go sustain it and grow it so that I can continue to have that lifestyle. Um, you know, I don't look. I don't think kids have been priced out. I don't think kids are priced out of homes. I hate when I hear that. I don't like when I hear they're priced out. They can't afford kids. Dude, these kids need to learn how to freaking go grind out. And I think America, we need to, particularly the Bitcoin community, needs to quit saying, "Hey, the kids are priced out now," and say, "Hey, bro, guys, you guys got to go back to an old skill set. Pick up that fiat. Go get fiat."
Well,
Because if
I
money
mean,
is printed, if we doubled the money supply today, it should be easier for me to get money.
well,
It,
and that is true. Um, but the real message is, I actually agree with what you're saying. The real message is here. you do need to take personal responsibility. You do need to take autonomy. However, doing what sort of the go work, put your money away, and then try to buy a house. Yeah, you aren't priced out of the market, but you have to save in a better money. You've
Well,
got to go
uh,
earn.
uh,
You've got
yeah.
to go earn in fiat and then convert it to a
Well,
better money.
100%, but that's always been
Yeah.
true. Like, who's gotten
Yes.
wealthy on this
Correct.
planet was people that went and got fiat, traded time for fiat, and took the fiat and converted it to something else. Now, unfortunately, Vanguard and
Yes.
BlackRock and the Merrill Lynch's and the Schwabs convinced everybody, and Warren Buffett, by the way, convinced everybody to go into the ETF model. Warren, he's the most famous. If I was a regular person, I would simply invest in the index funds, but he doesn't invest in the index funds. Okay. So
Percent.
what he does, what he takes major positions in companies. So I would tell the kids today, hey, look, man, nothing's really changed. In 1958, they were printing money. They were printing too much money in 1958. $100 is worth 11 bucks today. And if it says 1958, it's still going to say $100 on the bill. It's going to say 100. That's the great scam. It says 100, but it should have, if it was any other product on planet Earth, it would have a disclaimer at the bottom that says, this $100 does not represent the purchasing power of this $100. Based on the year, it would have literally a table. This is really
Yeah.
$11. Okay. And so we just need to educate kids today. Look, the game, has it changed? Maybe. Maybe it has. I don't know,
Oh,
but it's still fiat needs to get converted to a business. The business should be more valuable than the piece of paper. Like I just have a couple of things I do. I don't trade paper for paper. Okay, if I have a piece of paper, I do not trade it for another piece of paper. Now I would trade paper,
unless I'm traveling to
huh?
Mexico. Unless I'm traveling to Mexico, then I got to get a pesos.
Yeah, well, yeah, but I mean, it's just so you can get rid of it, though. Yeah,
I'm
yeah,
joking.
you're
Yeah.
just trading paper to
Yeah.
get rid of
Yeah.
something. Now,
Yes.
what I'm
Yeah.
trying to do is like I'm not going to trade a piece of paper for somebody else's piece of paper, treasury bill, or even a stock, unless I know something. And that would mean, hey, I'm trading a piece of paper because I believe in this company and I know the investors, I know what their thing is. And by the way, I'm gonna trade all my paper for that one thing. That's the other thing the kids need to be told. All this stuff that we've been told, it's not just the money supply that's broken. It's like the ideas that we have been indoctrinated on. Diversify your investments. You shouldn't. People should go all in on one thing. In the beginning, all in on one thing, and that one thing should be the individual. And then the brand, the marketing. This is what I've done successfully in my career is I get some money and I invest that money back in me. When I start getting a little better, then I start building outside of me and I invest in nothing that I don't understand. If I don't understand it, I don't do it. And then when I do it, I take major positions. Like I want to bet, I want to take big giant bites. And if I'm wrong, I'm 100% wrong. And if I'm right, I'm rich.
Well, that's the old saying, right? Diversification is just selling the winner for
Yeah,
the
that's right.
loser, and that's what you're doing. And I agree with you. And the point of the houses are unaffordable or not having kids, that's all in the fiat system. To your point, that's not getting out. That's not buying Bitcoin. That's not investing in a business. That's not investing in yourself. That's trying to go clip a
Yeah.
paycheck, putting that money in your savings account, and then everything that was just described becomes unaffordable. But that's not you can't live that way. And getting the education out to people to, hey, you have to store your time and energy in this thing called money, in a better money, in a reinvest it. Now that money can become capital, like you were talking about. Go invest in a business. Well, now you're a capitalist. Now you are deploying capital to try to create something new and create more value for society. But to your point, these systems, the legacy systems that are here, we're not educated about any of that. The school system teaches us the fiat system's good. Go to work, get your paycheck, be a good, dutiful little saver, and then you'll retire at 65. But none of that's true. So every single thing around us is telling younger generations to do the wrong thing when you're actually exactly right. The game has
It
never
really
changed.
hadn't, dude.
It's been
Like
the
like
same thing. Yeah.
what we've been
Yeah.
told has not been changed either. Save your money. Bad idea. First of all, you can't even do it. It's impossible to
Yeah,
save money. That word should not even be allowed in the banking system. If I used that word in my advertising and marketing, it would be it would the SEC and the FTC would come grab me. You can't save money. It's impossible. Okay.
yeah.
Buying a
Holding
house.
dollars. Yeah, yeah,
Buying a
yeah,
house should come
yeah,
with a misnomer. This is not an investment. In 1958,
yeah.
you could buy a house for $7,000 in Lake Charles, Louisiana. That house is worth 210,000 bucks today. That is not a good investment. It is a horrible, terrible investment. You paid property taxes for 67 years. You paid maintenance. You bought two roofs. You probably have gutters twice. You paid insurance for 67 times 12, whatever number of months that is, 840 months you paid insurance. It is a horrible investment, but most of us believe a house is the American dream and kids should have the right to buy one. It's not even a good investment. Let the institutions buy them all.
Yeah, it's a
Yeah,
consumption good
exactly.
at the end of the
It's a
day,
place
and
to live,
and
period.
exactly, it's a utility purchase, and also measure it in gold, measure it in the S&P. You've probably been crushed, and
Measure it
it's
against almost anything
yeah,
else, and it was a terrible
exactly,
investment. But
yeah.
it, but,
Anything
but
except holding the
yeah,
currency.
but when you tell people that, and
Yeah,
even the
yeah,
Bitcoin rooms, I hear these Bitcoin rooms where they're like, the young kids have been priced out. It's horrible, bro. You guys are back to the fiat system. Homes are fiat.
yes,
They're based
yes.
on debt. Real estate is only as good as the debt market is. So there's a
Yeah, I mean, that's the saying I love is, "The house isn't the asset, the mortgage is the asset."
in many
I
cases, it
mean,
is.
yeah, yeah, how long can you stretch it out, at what rate, and is that better than the rate of the debasement of the
Yeah,
currency? And in most cases, the answer
yeah.
is yes. So, that's the real asset. So, um, anyways, yeah, well, so along those lines, let's walk through. I know you launched a REIT and you're looking at doing some other real estate investments. Some other folks out there. Are you familiar with Battery
I'm
Finance, by
not.
the way, Andrew Hones? Do you know? Okay, so he did one of these deals on a multifamily property in the Philadelphia area, and it was about a $15 million deal. Same thing. Took bunch of the equity in it, layered in some Bitcoin, put a 10-year note on the thing. So, curious as to why don't you talk about what you've already done and closed, and then the structures you're looking to put in place. And I'm also curious as to sources of financing to the extent you can talk about them. One of the issues, I actually brought that deal to the institution I was working at, and 36 hours before our meeting, I got the whole thing torpedoed. It was very frustrating. But one of the issues we were having, and the reason I was trying to bring it to our bank, was finding the capital to get lent into the deal. And right now, it's pretty much private credit exclusively. But curious as to what you're seeing on that front and how you're working that as well, to the extent you can
Yeah.
talk.
So, well, I can talk about anything I'm doing. So, and will. Um, I was
Fair.
in a deposition 2 days ago, and they said, this is all to be held confidential. I said, no, I don't agree to that. I don't agree to any of this being held confidential. I want all of it to be made public because I am an open book. So, what we've done is,
How many times have you been deposed, by the way? I've been deposed a couple
well,
times and
I
such.
was watching a deposition. I wasn't. the-
Oh,
Yeah, I
watching
was
one.
watching
Okay, okay,
someone that
gotcha.
we
Yeah.
deposed, but
Oh, okay.
um,
Yeah,
and they wanted to be held confidential. I'm like, absolutely not. I want it to be public for everyone to hear.
yeah,
Um, so yeah, what are we doing? We're doing these are big deals. Okay, these are the last deal we did was $235 million. We bought it out of bankruptcy from an institution. We buy institutional quality real estate. Number one is what Cardone Capital focuses on: great locations, big properties, somewhere between 120 and $300 million. We bought this from Blackstone out of bankruptcy. It should have sold for $350 million. It had too much debt on it. The guy had been in the project 17 years. It was tied to two other properties, so they were cross collateralized. It was about $1 billion worth of debt, actually. And we bought it from Blackstone, closed in 10 days with all cash for 235 million bucks. Blackstone didn't know that we could do that, so they were sitting there just waiting for this guy to tap out and didn't think anybody'd come to the table. I put a stalking horse in place, a very sophisticated negotiating. Um,
done many of
yeah,
them. Yeah. Sadly,
you
yeah,
know,
yeah, yeah,
and we basically trapped
yeah.
the market and said, "Hey, we'll close in 10 days." I put up $20 million of my own money, non-refundable. So none of the other players could come in. Big institutions cannot do that. They might be bigger and richer, but they can't move like that because they got a board they have to be approved by. So we trapped the institutions out. We were awarded the project, and rather than taking the project at the 235 number, we know the project's worth 350 because that's what it costs to rebuild it. We just stacked another $100 million of Bitcoin on top of the 230 load. Okay, so now we have to raise 330 million, not 230. Now, the benefit of that I think Saylor calls that's not a bug, that's a feature, you know. And the feature is nobody's look, you can't you said it. Your guy in Philadelphia, he was having trouble raising 15 million. Everybody's having trouble raising money. I have 20 million people that follow me online and they follow me for business advice, scaling advice, sales, marketing, real estate investing, and some tiny percentage of that 20 million is qualified and would like to invest with me in our projects. So I funded the project off of my balance sheet. And then I went to my audience and said, "Hey, would you guys like to be involved in this project? We're going to do an 8% preferred return. The property does about 4.5% a year. We add the Bitcoin, it's going to do about 3% cash flow. We're going to use the cash flow to buy more Bitcoin. There'll be no distributions, but I'm so confident in this asset that the investors will get 8% preferred before I get one penny. The investors get 8%. So if we're in for 4 years, you make 32% on your money. And then we do a 50-50 split on the real estate and the Bitcoin."
Oh, wow. So you get like a preferred plus almost like a
Yeah.
warrant
Yeah.
or yeah,
And
yeah.
and so
Okay.
we did 5 of these deals last year. Different structures. We bought about $1 billion worth of real estate and a couple $100 million of Bitcoin, and we're going to keep scaling that out this year. So the goal is to take that public, Brandon, and not be a treasury company, but be a real company that has a real asset, real cash flow, real customers from day one, and take these two, well known assets, real estate that's 2,000 years old. Everybody seems to understand it. And this new thing, this 13 or 14 years old called Bitcoin, both hard assets, both real world assets. One cash flows, one doesn't. One's very stable, and the other one's extremely volatile. One's not liquid ever. Like literally, it would take me 9 months to sell that asset right now. And the other one's liquid, like some people would say, too much, too often, too quickly. And so we combine these two super assets and we think we end up with a better asset. Last thing I'll say about it is the goal here is not to do one asset. The goal is to attack the $4 trillion REIT industry that hasn't changed in your entire lifetime. In 1960, the REIT industry was created, REIT, a real estate investment trust, as you know. It has not changed in 65 years. It was a tax structure put together that institutions jumped into, the Avalons, the Camdens, the Starwoods, et cetera, to capitalize on basically raising money. They've underperformed. There's too many of them. There's 190 REITs. It's a $4 trillion industry. They basically control most of the of commercial real estate in America. They cannot hold any currency on their balance sheet. They'll never be able to hold Bitcoin. And what I'm attempting to do is what Peter Thiel talks about is competitions for dummies and losers. We don't want to compete with the REITs. I'm not a REIT. We're an Up-C that holds Bitcoin, and we don't do distributions. We reinvest the distributions into Bitcoin, and we have the best of two worlds. And we'll take what a REIT's happy to distribute 12% internal rate of return.
Wow.
They're thrilled if
Yeah.
they hit a 12.
Yeah, that's a monumental
Yeah,
yield. Yeah.
most of them are doing sixes and sevens, and we'll
Yeah,
we'll
six.
take we'll
Yeah.
take
That's what mine was returning before I
yeah,
divested.
if
Yeah.
there's not a capital call, by the way.
Yeah,
And
yeah.
we think we'll take real estate and make it a 25 and 30% annualized return now by combining Bitcoin and real estate.
That's I mean, it makes all the sense in the world, and it's easy for, a lot of Bitcoiners, myself included, would go, "Oh, why don't you just buy the
Right.
Bitcoin?" But you can't get an investor base, you can't get people to put the money in, and you actually get to create a little better of an upside for yourself by promising some stability to other people, saying, "Hey, we'll give you this stable asset so we can help raise the capital to go buy this Bitcoin." Now, your case is unique in that you were able to go buy it on your own, anyways. Um, but most people need to raise the capital, and that unlocks putting this stable asset that people understand, that unlocks additional capital to go buy additional Bitcoin. So,
Yeah, well,
um,
the Bitcoiners would say, "Yeah, Grant, why don't you just?" I mean, Michael Saylor said, "Grant, why don't you just buy $300 million worth of Bitcoin?" I'm like, he's like, "You're gonna regret it. You're gonna wish you just bought all the Bitcoin." I said, "Yeah, but then I'm not a real estate company. I own 14,000 units, dude. I'm gonna end up with 25,000 units, and then I'm gonna go to 50, and then I'm gonna go to 100,000 units. When you guys sell your Bitcoin, what do you have now? I mean, all these OGs that just sold their Bitcoin, what do they have now? They got a tax event. They have no cash flow. And now they're gonna have to come buy more Bitcoin later, or you're gonna have to convert to silver or gold or
that's
like,
that's the thing. They're distributing back to the network, right? Whereas if you at least if you have an underlying asset that is cash flowing, that is proof of work, that is adding actual value, that the income is more than the expenses, then you're able to roll that back into more Bitcoin as opposed to just liquidating it. And maybe for the next 10 years or 15 years or something like that, um, that makes,
well,
the Bitcoin's CAGR is maybe more than that, but long term, eventually one day you're going to run out of just the underlying asset, and you're going to need something that is producing
you
income
know, you
eventually.
use your
Yeah.
imagination a little bit and assume that the marketplace is actually gonna start changing and validating proof of work, as you said. Like, I got buddies at Fannie Mae and Freddie Mac. I put 5 of these deals together last year and went to them and said, "Hey, guys, I just bought $1 billion of real estate, $200 million of Bitcoin sitting on my I put loans on these deals. I got Fannie and Freddie debt. They do $12 trillion worth of a business. And I said, I'm
Sure.
going to come to you in the future. I'm going to come to you, and I have $1 billion worth of real estate that's going to be worth maybe $1.5 billion at some point. Over time, as the rents grow, the value of that real estate goes up. The debt should have gone down or stayed stable if I had it fixed. Now, in addition to that, I had $200 million of Bitcoin. 5 years goes by, the 200 million could be a billion. So now I have 1.5 billion of real estate and $1 billion of Bitcoin. I have $2.5 billion, but I still have the same debt load. I'm going to go to Fannie and Freddie in the year 2028 and say, "Hey guys, I want to borrow against the 250. I don't want to borrow against the real estate only. I want to borrow against the combination of this hybrid that is now in an upseek. It's a corporation that owns these two assets that are fused together now, not separate. They're fused together. I want to borrow against both of them, and I want lower rates than you would typically put on a mortgage.
What was their response to that? I'm
Well,
curious.
build it, and they shall come." And
I,
I can just tell you now, they're very excited about people that do things, particularly Trump and Basint. They're very excited about people that validate things, not that ask for money first. And
We I was working on a Bitcoin mortgage, a residential one with one of my buddies, and obviously during the last administration it was just DOA. But I went through and went through the current mortgage law and what, to your point, what Fannie and Freddie are buying and what would need to change to allow Bitcoin residential mortgages with the combination of the two to be bought by Fannie and Freddie, what parts of the current mortgage regulations and all that stuff need to change, and went through line by line and put that all together. And it's sort of stalled, but I know it made it to someone
yeah,
there eventually, and so hopefully that gets picked back up. But
well, look, it would solve a lot of real estate problems. Okay, when interest rates explode, then when rates, let's say you had a rate of 4% on a loan, and you wake up one day and it's 8, that means your mortgage is worth a third less. I mean, I'm sorry, your real estate's worth one third. It will not carry if it doubled. If the rate doubled, you need to pay this debt down about a third. Now, who's going to have that money? No one. We found this out in 2008. Found it out in 1996. 600 banks went out of business in the late 90s. In 2008, everybody remembers what happened then. The debt, if the debt was 200 grand, it probably needs to be lowered by a third, so about to 140. So somebody's going to come to you and say, I need 60 grand to extend your loan. Well, nobody's going to have that money. But if you would have had a small portion of Bitcoin over the last 13 years on that same balance sheet, that would be your liquidity. REITs would no longer have to make capital calls. Syndicators wouldn't have to say, hey, we got a roof to fix. Or in the case of Starwood, they got 10,000 roofs to fix. That's going to cost, 60 or $70 million across their portfolio. You would have your Bitcoin that you could either margin against or just cash in and use it to have liquidity constantly. So I absolutely believe that this is going to be the beginning. 2025 will be like 1960, the creation of the REITs. People just kind of slowly came in. We'll look up 20 years from now, and all real estate purchases will be made with some kind of requirement to have Bitcoin's liquidity.
I mean, it just makes perfect sense, and that was part of the pitch I was giving my former employer was underwrite the Bitcoin to zero. Let's just underwrite it
Yeah.
to zero. Now let's underwrite the property under your normal commercial lending metrics for real estate, and then the Bitcoin will just be a free roll, as we use they say in the casino
Yeah.
industry, and then you get to wake up in 5, 10 years from now, and hey, if the Bitcoin's at zero, guess what? No
Still
big
got your real
deal. We
estate.
still have the property. Right, exactly. It performed exactly as it was supposed to, blah, blah, blah. But if it goes up 10, 20, 100, 200, 400%, now all of a sudden we have a lot more flexibility with this. The lender's in a way better position. Now they're already foots in the door and they say now we can re-lend, which is what every lender wants to do. They just want to get another loan out the door. So now we can loan again against this at a higher number, and it's great for
Yeah, we're just
everybody.
not we're just
So
not
I
quite there yet. Nobody's done it at scale.
no,
We did
yeah,
5 of these in our first year. I don't need Fannie or Freddie to do it. I went to my audience to do it. I don't need a bank to do it. I showed the model to Bank of America, Wells Fargo, JP Morgan, Goldman Sachs, Morgan Stanley, Cantor Fitzgerald, Clear Street. They're like these guys, and these are legacy guys. Bank of America. This
I know.
guy
Oh, I
created the
know.
REIT industry. Okay, these guys have
Mm,
like they're the formation of the fiat system, and they looked at this deal and they're like, I don't even know what I'm looking at anymore. But if you can pull this off, bro, he's like, you will literally single handedly change how real estate is purchased in this country. And what was super cool was we did 2 meetings the first day with Bank of America and, JP Morgan. There was, 7 people in one meeting, 8 on another meeting. None of them, all of these guys are over 45 years old. None of them owned any Bitcoin. All of them owned real estate. All of them were not pleased with their real estate returns, and were struggling with their real estate investments. And all of them would love to own Bitcoin, but they're scared it got away from them and that they're too late. All 15 people said, hey, I would invest in that model. It's like smuck insurance. It's like if it just exactly what you said. If it goes to
yeah.
zero, I still have my real estate. But if it
Mhm.
goes to a million, I got a taste.
Yeah, I mean, and that's the answer, right? Is why don't you just go buy Bitcoin? Well, because raising the funds is ten
And
times
let's face
harder,
it,
and
most
this is
people have not
something.
gone out and
Yeah,
bought Bitcoin. Yeah, what
no,
what percent of planet Earth owns Bitcoin today?
I would say the percent that owns it is probably somewhere around 5%. I would say people that actually self custody have a significant portion of their net worth in it is probably less than half a
Yeah.
percent.
So what
You know,
percent own
yeah,
real estate or live in it?
yeah, yeah, 80. Oh, or live in it.
Exactly.
95%.
So all
Yeah.
I'm doing, we onboarded almost 2,000 people into Bitcoin last year. that have never bought any Bitcoin.
Yeah, I mean, that's amazing, and this is what it's gonna take. It's going to take stuff like this, and then people are gonna look at it, and they're gonna go, "Oh, damn, what if we just did a little more in Bitcoin? Or what if we did on all of it in Bitcoin?" And yeah, it's a gateway drug, if you will, to get people to
Well, the
understand
problem the problem with the
hard money
Bitcoin
and sound money.
community
Yeah.
is it continues to try to explain Bitcoin to people that don't want to understand Bitcoin. Like you're into it, right? You're into the whole fiat scam and the demonetization, debank, blah 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 blah. You're into all that, but most people do. Like I'm in business. I don't really want to hear the doom gloom, end of the world. The
You're
U.S.
right.
dollar is going out of business. It's a scam. Like I spend 90% of my time trying to collect fiat. I spent my entire life trying to get money, and now you guys are telling me that it's bad. So I'm like, wait a minute. The game I've been playing was the wrong game. I feel like a loser. So I just turn you off because I'm like, I can't handle this conversation. Um, the Bitcoiners even say that. Like, and so I'm not trying to convince somebody to buy Bitcoin or that the US dollar's gone or fiat's terrible. I'm just saying, hey, this is a better way to invest in real estate. You get the cash flow. By the way, you get the tax write off. Imagine, imagine being a 10% owner and $100 million of Bitcoin and getting the real estate, not having the management problems, no eviction headaches. And you got on that particular deal, I think we did a $48 million tax write off at the purchase. So you would have gotten, if you were a 10% owner, $4.8 million write off while you end up being a 10% owner in the real estate, a 10% owner in the Bitcoin, 10% owner of the depreciation, and a 10% earner in the cash flow going forward.
Yeah, I mean, we have found with businesses as well that, especially in the United States, telling people that your bank account won't be seized, or some person in Uganda used this to escape the border. It just people aren't interested in that. But what they are interested in is they see things increasing in prices around them, and then they go, okay, what is a way I can defend myself against this? How do I protect myself? Against these problems, and that is what resonates with them, that they understand. And it's, hey, what we were talking about at the very beginning: continue to be profitable, continue to run a good business, continue to take in more than you spend, and then store that somewhere else. And that, in your case, there's real estate options, and we just try to say, it's Bitcoin's easy. You just buy some, you just convert some of your cash to Bitcoin, or all of your cash if you're a diehard believer, and then you just leave it there and you hold it there. And it's a much better option than having to continually try to outrun the
Yeah.
inflation that you're
And if I could,
experiencing. And that's what
yeah.
hits
And
with
if I could
business
just take a
owners.
moment to show you, that's exactly the story that you just laid out that we tell in this graph right here. I'm not spending a lot of
Yeah.
time talking about the Bitcoin. I'm not explaining it. I'm not explaining the fiat situation. I'm spending time saying, hey guys, look, I bought this piece of real estate. See, the problem with Bitcoin is there's nothing for me to look at. And most guys my age are like, I need something to look at. It needs to be a car, a watch, a house, something.
Oh,
So
I
I'm
know.
showing the
Yeah.
real estate, right? I'm showing this piece of real estate. They're like, oh, that's cool. The blue line in this is the stable business that you're talking about. It's a cash flow business from day one. We didn't build it. This guy took 17 years to build this asset. I took it out of bankruptcy. It cash flowed the first month. I took the cash flow and I bought Bitcoin with it. Rather than doing 4.5 or 5% cash flow, it did 3% because we loaded up with this orange line. This orange line at the beginning, that's 1,000 Bitcoin with this purchase. So in
Yep.
addition, like
Yep.
if the line goes crazy and I go to $1 million, I end up with $100 million score on the Bitcoin. No, no, I'm sorry, $1 billion score on the Bitcoin.
Yeah.
Yeah,
Yeah.
sorry. Can't even think that
Yeah.
big.
Yeah.
And I still have my
Yeah.
let's say the Bitcoin blew up overnight. I'd sell all the Bitcoin. I still own my real estate. Not a bad
Yep.
score.
No, and I mean, that's the thing too. Same concept, right? With a business, it's
E
just a different way to generate
exactly.
cash flow. if the Bitcoin goes to zero, you still have your cash flow positive business. And circling back to the first thing we talked about, I'm still of the belief that that is the real value. That is the way you want to operate. And yes, you can be a winner in sort of the negative cash flowing borrower, raise equity to enrich yourself, but that doesn't last. And you're gonna end up. Was that a 363 or a Chapter 7 you bought that bankruptcy out of?
I'm not sure. It was a full bankruptcy though.
Okay. Oh, it's probably a liquidation. That's the Chapter 7, probably. So yeah. So then you're gonna, you'll be the company ending up in a Chapter 7, and then someone's gonna come in and buy you out of your blood, sweat, and tears. So Grant, I we've already gone over what you allotted for me, so I really appreciate your time today. It was great talking to you. Where do you want to send people
No,
anywhere
I mean,
to
if you're
for you or your
we're
business
about
or
to put 2 more of these deals together. We actually the guy this particular property that we bought next door to it, the guy owned the whole block. He was building out a hotel. I referenced this earlier that he'd cross collateralized some real estate.
Yep.
This is the best location you can buy it. Probably top 5 locations maybe in the country. Top location in Boca Raton. Extremely wealthy people. We have tenants in the building, by the way. When we bought the building, the first thing we do is we go to to the tenants, the residents, and say, "Hey guys, we're taking over the building. My name's Grant Cardone, Cardone Capital. By the way, if you guys would like to invest in a building, you don't have to just be a tenant here. It's a fantastic property. The average resident makes a $500,000 a year. They're qualified to invest, and we actually have people that they're like, "Well, how much do I need to invest to pay my rent? $1,000,000. That'll pay your rent." By the way, it's the largest real estate Bitcoin project ever done on planet Earth, including Boca, the whole planet, uh, and it's fully funded. So we had residents actually come in on that deal. Next door to it is a
cool.
hotel called the It was going to be the Meridian Hotel, but it's going to end up it's in Chapter 11 right now. We're going to try to take over that hotel. In addition to the hotel, there's 750 golf memberships 1 mile away. And so we're hoping to turn that into a 10x hotel Bitcoin, the largest Bitcoin hotel fund in the country. They did one up in Aspen years and years ago, but nobody repeated it for whatever reason. I think they tried to put it on the blockchain, which was a complete waste of time.
Yes.
Um, but yeah, the Cardone Capital is the website people can go to. But if all you got to do is Google my name, and you'll easily be able to find me just the way your wife did.
There you go. Exactly. So, yeah, she's going to be very jealous. This will probably be the one podcast I do she actually listens to. So, appreciate your time. It was great talking with you. And honestly, I I'm so excited for stuff like this. I want this stuff to succeed so badly because people need this, and it brings more attention. It's all about education. It's all about adoption, getting people to understand that we can have better monetary system, a better asset base, and that people should be, as you said, focusing on one thing, taking their time and energy and storing it in something better than a debasing currency. So appreciate the work you're doing on this. Appreciate your time today, and great
Thanks,
talking
Brandon.
with you.
Appreciate
Thank
you,
you.
man.